Thank you, Danny, for that. Now we are going to shift into sort of the economy and markets portion of the call, which is where we tend to spend most of our time on these calls. And I'll bring in our other panelists, Jason Ware and John Bird. Before we do kind of get into the meat and potatoes, I just want to sort of set the stage or give some high-level information about some of these sort of key economic pillars that will be part of the conversation today. And I'm going to start off just talking about where we are with interest rates. So we saw interest rates really peak in the middle of last year. We saw the Fed funds rate hit its high mark in July of last year, and that's where it currently sits, around 5.25% to 5.5%. A question that we've been getting a lot and we will dive into today is, when are we going to see rates come down? When are we going to see the Fed start to cut rates? So stay tuned, more to come on that. I do want to note that the yield curve is still inverted. And what that means is that we're earning more interest on our short-term debt investments than our longer-term debt investments. And the curve has been inverted since August of 2022. And why we care, or why that's something that's talked about often, is the inversion of the yield curve has historically been a really good sort of leading indicator of recession to come. And one of the questions that we'll work to address today is, what's Albion's stance on recession? Certainly there was a lot of questions about that last year in 23. It's still on the table. Is that something that we're looking down the road at in 2024? Moving from interest rates to inflation, although inflation is not the first word out of everybody's mouth anymore, it's still a relevant topic in economic discussions. And we saw inflation on average at about 4% in 2023. And we just got the CPI number for January of this year yesterday, the Consumer Price Index information, and we saw year over year prices went up about 3.1%. So we're still not at the Fed's 2% target. There's a lot of questions about, what will it take to get there? What are our thoughts on inflation? And I know our panelists will have details and thoughts to share and insights there. The labor market and jobs is another topic that we'll want to discuss, and it remains strong. We saw over 2.5 million jobs added in the US in 2023. And on average, wages grew about 4.7% last year. So what that means is that workers are experiencing real wage growth, or they're seeing their purchasing power increase, as on average, their wages are going up at a rate greater than inflation. And this sort of strong labor market trend is continuing into 2024. We saw over 350,000 jobs added in January alone, which was higher than what was anticipated. And so we know an employed consumer and a consumer who's experiencing real wage growth, they're going to be a more confident consumer, likely going out and continuing to spend in the economy. And as we've talked about on these calls, consumer spending makes up about 70% of the US economy. So key component. On the topic of the economy, it grew last year at a rate of about 2.5% as measured by GDP. And GDP is gross domestic product. And essentially, it's the total market value of all final goods and services produced in the US, as we refer to US GDP. And we'll get more into, how the economy is doing, what we saw last year, and what we think we'll be seeing in 2024.